Hello friends, I'm Himanshu Jain. I'm one of the co-founders of the Wall Street School. In the last 12 years or so, we have trained and placed thousands of students in financial modeling and investment banking and equity research profiles. Now, before enrolling for our flagship financial modeling program, students ask us a pertinent doubt. What do financial modelers actually do? And should I do financial modeling? So to cater to this, we have made a detailed video in which we are going to cover what is financial modeling, why financial modeling, what are the job prospects which are there in a financial modeling career, and how to get into this field. So to get a detailed and comprehensive understanding of this, watch this video till the end. Let's get started.
Hi friends, welcome to our YouTube channel. So today we have a very interesting topic to address. So we would be talking about what is the work profile in the financial modeling job. Now we have a lot of things to talk about. First we'll have a quick introduction followed by understanding what exactly financial modeling is all about. And then we will move ahead with why we should be pursuing financial modeling, and then we will be in a position to understand the various work profiles that are available in financial modeling jobs. And of course, then finally we would be working upon the checklist that will help us crack a job. So without any further ado, let's get started. So friends, first of all, we must understand that financial modeling is one of the most sought after skills in the field of finance and investments. Now the question is, what is the reason for the popularity? Who uses financial modeling and exactly in which profiles? Well, to answer all these questions, let's first understand what exactly financial modeling is all about. So basically, when we discuss financial modeling, it is a skill. We must understand that it is not a theory or a concept, but more of a skill that we apply. Now, it is a process that helps us create financial models on some softwares like MS Excel. Now, what is a financial model? Let's understand that. So basically, when we look at this term financial model, we see two words, financial and model. What is a model? Model primarily means a structure, and financial means that it has something to do with financial data work. So basically, we are creating such models on which we can work upon financial data set so that we can make a rational and concrete decision. So ultimately, the goal of any financial model is a rational decision making, for which we are using the skill called as financial modeling. So friends, let's understand financial modeling in a more detailed manner. So financial model basically creates a structure that we create on MS Excel, and we will be working upon financial data, and the ultimate goal is some kind of financial decision by looking into the future of that decision, looking into the best case and the worst case scenario, and then making a rational choice. So I hope we understand the agenda for which financial modeling is done. So friends, in order to understand the importance of financial modeling, we must understand how the data evolution has happened over time. So basically, in the past, data procurement was a very big problem for us, especially in all the fields. If we talk in particular about finance and investment, definitely not everybody was entitled to the financials of a company, technical charts, market data, nothing was available. But the present problem is not about data procurement. Everything is freely available, right? But the problem today is that there is too much amount of data. And now comes the solution. The solution is basically about segregating the noise, eliminating the noise so that we can focus upon the main information, and by processing this information, we will be able to make rational decisions. And friends, financial modeling is one tool that actually helps us eliminate the noise, process the information, analyze it, and then finally make concrete decisions. So that clearly answers our question, why financial modeling? Because it is addressing a very important problem at hand, helping us clarify the noise, work upon the right data, and then finally be able to make the right choices. Well, now let's move ahead and understand what kind of decisions does financial modeling support. So friends, there are so many decisions that are to be made in the field of finance and investments. Let me introduce the various areas that we have. So a lot of decision making is involved in the investment banking domain, investment management, portfolio management, business planning, private equity investing, mergers and acquisition, corporate finance, business valuation, equity research, credit research, and financial planning. So these are the various areas in the field of finance and investments where we use financial modeling. Now, how do we use it? Let's understand each of these areas in detail and then understand how we use financial modeling, and that opens what kind of job profile for you. So, let's get started on that, and let's first talk about investment banking. So friends, as investment bankers, we typically build financial models to do business valuation. Now, what is business valuation? Business valuation is about finding out the true worth of a company, which would be helpful to us in various situations. Like for example, in case of merger or acquisition deal happening between two companies. Like for example, in the recent times, we heard about HDFC Limited being merged into HDFC Bank. Now, for this deal to be favorable for both the companies, we need to get to the valuations for which financial modeling will be used. Again, if we take up a very famous example of acquisition deal, we all know that Facebook went ahead and acquired Instagram and WhatsApp. Now, what was the reason for Facebook acquiring these companies? Well, Facebook could foresee the great future that these businesses had to offer, and therefore Facebook decided to acquire them. Now, for the deal to be favorable for Facebook and Instagram or WhatsApp, we need to do the valuation of these companies, which would ultimately decide upon the price that Facebook would be paying to WhatsApp or Instagram to acquire them. So these valuations would be again requiring the use of financial models. Then if a company wants to issue debt, let's say they want to issue bonds, then at what price they should be issuing it, what should be the business valuation, all these questions need to be answered, and we use financial models for that. Moving ahead, if a company is getting out with its IPO, that is initial public offering, that is the first time the company's share is getting listed on any stock exchange. Now, it is a very important point for the company to launch its IPO at the right price, at the right valuation of the company, so that good investors can be attracted towards this deal. Otherwise, there can be disastrous impact on the price after getting listed. We all know how Paytm prices crashed up to 70% in just 6 months after the IPO was launched. So, for the best interest of the promoters, the private and the public investors, it is very healthy and important for the company to get out with its IPO at the right valuation and at the right offer price. So, for that, again, we take the help of financial modeling. Then, if a company is getting out with its FPO, that is a further public offering, that is for the second or the third time after the IPO, company is getting out with some shares, issuing some shares to the public. Like for example, in the recent time, Ruchi Soya company got its FPO. Now again, it is an important deal for the company. What kind of offer price should be given to the investors? All those decisions need to be made, and we use again financial modeling for that. Then of course investment bankers are involved in multiple advisory services for which they again use financial modeling. So friends, there can be so many reasons in the investment banking domain in which we can use financial modeling to make concrete decisions. Well, moving ahead, let's talk about our second area, of job role, that is equity research. Now, what is equity research? Basically, first let's understand the term equity. Now, equity is about investing into the equity of a company, that is investing into the shares of the company, and as a shareholder, technically you become the owner of the company, the part owner of the company. Now, if you are investing in a company for long term, definitely a lot of research and analysis will be involved around the company and its respective industry. We have to make a lot of effort to understand which company is going to be a multi-bagger in the future, that is capable of providing us with multiple times returns. Which industry is best suited as per the current market situation to invest in? Well, in order to find the best investment opportunity for the clients, we do equity research and analysis, and financial models are very helpful in it, because financial models are basically structures that we create on Excel so that we can work upon the financial data, analyze it, study it, and then get to the projections of the various companies that will further help us understand the valuation of that company, and then finally conclude whether to invest in that industry and company or not. So all these things we cover as part of equity research. Moving ahead, let's talk about the next area of interest, and that is about private equity. Well, equity is of two types. One we talked about was public equity. This one that we are currently talking about is basically referred to as private equity. That is, again, you are investing into the equity of a company, but it is private. That is, the shares are not publicly listed on stock exchange and available for the public to trade upon. These are private shares being issued to private investors. Now, there is a whole lot of risk involved when it comes to private equity investment, because these are private companies, mostly startups. So, there is a less probability that all the startups will work around well. So, what do we want to do? We want to have proper research and analysis in place so that we are able to identify such companies which have a great future potential, that of course, since they are in their early stages, would be available at lower valuation. We want to find out such companies which have a lower valuation right now, but they have the potential to deliver great valuations in the future, and therefore we are interested in investing in them. So in order to analyze and research about these companies and get to their fair valuations, which would be helpful to us to decide whether to invest in this company or not, all these things are done with the help of financial models. So whether it is a public equity investment or a private equity investment, everywhere financial modeling is of help. Now, let's move further and let's talk about our next area of interest. Well, friends, in order to analyze a business idea for both the founders and the investors, it is very, very important to understand which business idea to invest their resources into. And for that, we want to look into the future of that business idea in terms of numbers, like what kind of financials we can get from that business. What would be the future cash inflows and outflows of that business idea? Look into the best case, worst case scenario, deploy various capital budgeting techniques and valuation techniques in order to evaluate it well, and then finally conclude whether to invest in that business or not. Because a business can be a game changer for us. So we want to make this decision with a lot of care and risk management, and with the help of financial model making process, we are able to do these evaluations very systematically. Right, friends? So friends, let's move forward with our next area, and that is corporate finance. Now, what is corporate finance? As the very name suggests, it's about finance of corporate. What do we mean by that? It's basically about the financial planning and management of a corporate. Now, there are two important decisions that we need to make in this area. One would be about raising funds, That is how and when and how much funds to raise, whether to issue equity, whether to issue debt, at what cost of capital. All these decisions need to be made. And second is about allocation of funds. That is the funds that we have raised and the funds that we have created in the business, how to utilize these funds in the best possible manner for the best results and synergies for the company in the future. So it is very important for the company to keep growing, exploring and moving forward, for which they need the right allocation of fund strategy, the right projects in which they would be allocating their funds so that they can diversify and grow in the future. Like for example, we've all heard about the company ITC. Now, what does ITC do? Well, ITC started off as a tobacco manufacturing company. But soon it realized that though this business was giving them good revenues, still there was a lot of risk in this business because a lot of regulations get attracted towards it and a lot of taxation policies also get attracted towards it. So the management of ITC decided that we will not be dependent upon this tobacco business. We want to diversify, we want to allocate the funds that we have gained through this tobacco business and we want to allocate it into different businesses. And soon we know ITC as an FMCG company, that is fast moving consumer product. So it has a lot of brands that it has created. There are so many things that ITC is involved in. So they are no more dependent upon cigarette business for their revenues. Although it still counts as a significant source of revenue for them, but they still are not dependent on it anymore. So proper fund allocation policies are to be made, and in order to make these decisions about how to raise funds and how to allocate funds, we definitely use financial models that can look into the future of the various projects, their future revenues, expenses, cash flows, etc., which would further help us analyze these projects and evaluate the best decision for the firm and its future. So friends, that was about corporate finance. Moving ahead, the next area is credit research. Now, what is credit research all about? Well, the companies that issue credit instruments like bonds, etc., for the investors to understand the credibility of that company, whether the company is sound enough financially, whether the company will default in the future. For all those types of analysis, we need to research and analyze them, study them, and for which we have credit research analysts who prepare such reports where they will be researching and analyzing upon the companies and the industries and provide credit rating which would further help the investors understand the solvency and viability of the business in which they are thinking about investing. So it is again a very sensitive matter. Investors' hard-earned money is involved. We have seen such cases in past in which the credit rating was great and then also default happened. So we don't want to land up in such a situation and break the interest or trust of the investors. So for that, proper research analysis and proper financial modeling needs to be done in terms of credit research of companies and industries in the credit domain as well. So friends, moving ahead, let's talk about the next area, and that is about financial planning and analysis. Well, first of all, let's understand what is financial planning and analysis all about. Here, we need to track down the company's income and expenses, analyze and plan for the future finances, and perform a detailed review of P&L along with variance analysis. And to perform all these activities, we again use financial modeling. Let's move ahead with our next area, and that is about financial analysis. So there are a lot of financial analysis job roles where we have to perform the financial forecasting in terms of the forecasted income statement, the forecasted balance sheet, and the forecasted cash flow statement, and then analyze the financial statements do all sorts of analysis on it, be it the ratio analysis, which involves industry analysis and the time series analysis. For all these research analysis and forecasting, we need proper financial models in place which would further help us make a decision regarding the financial health of the business that we are concerned with. Right, friends? So let's move forward with our next area of interest, and that is personal finance. So we have been talking a lot about corporates, businesses, investment banks, and the various roles within them in which financial modeling is helpful. So moving beyond that as well, even if we talk about the first personal financial planning of an individual, financial modeling is of great help. Well, friends, for the financial success of any individual, it is very important that how that individual is managing their funds. So it involves a lot of decisions regarding how the individual can create multiple and diversified sources of income, how to budget the expenses, and how to save and invest and plan for the financial goals. So all these decisions require a proper system in place so that we can make rational choices about how we are going to manage our funds, and which would ultimately add value to the financial success. And for all these reasons, again, we use financial models because they have the capability to provide us the system that is required to achieve the goal in hand. So friends, in order to conclude it, we can say starting from personal financial planning to business financial management to corporate fund management to private equity, public equity investments, mergers and acquisition deals, launching of an IPO, or raising funds for the corporate, or proper capital allocation of a corporate. In every sphere of decision making in the field of finance and investments, we use financial modeling to guide us for appropriate decision making. So friends, I hope this information was useful to you to understand what kind of job roles and job profiles we can have in financial modeling. So let's go ahead and address our next question. That is how to build a successful career in the field of financial modeling. So friends, there is this checklist that we can follow and which would be helpful to create a successful career. First of all, we need the right knowledge because we are building skill. We are learning a practical solution oriented skill. So we need a lot of conceptual clarity and right knowledge with respect to it. Of course, followed by the hard skill which help us understand and build financial models from scratch. And when we have the right knowledge and the hard skills combination, we definitely need some soft skills, that is some good way of communication and presentation that would help us outstand the crowd. So friends, I hope this information was useful to you. If you have any questions, you can reach out to us at wallstreet.com, or you can comment below in the comment section as well. Thanks for watching. See you next time. Bye bye.